Hey everybody, Mark Yagi, welcome back. And I'm just going to talk real quick about MicroStrategy, and I'm just going to close out this short position, and then I'm going to hopefully be able to show you the spreadsheet if my system will update quickly enough. But I want to show you what's going on. So we've got MicroStrategy is down $1.38 right now at 330. Now I have the 357.50 short. I sold those for $2,065 a contract, and they're basically worth 6 cents, right? Or $6, right? So I made $16,466 if I close it out right now. It's worth $48, right? So I made all of this money in juice. I made 16 grand for the week. Now, the stock has gone down and it went down. I had 357.50s. It's obviously $27 below that. But I made $20 on the way down. So I feel like I had some cushion. I got a little bit of in the money amount when I did the sale. I also got some juice. But you know what? I get all of that to protect my downside. And so that helped me drop this thing, from, let's say, if I was happy at 357, 357.50, I'm happy at 326, for example, right now. And the stock is at 329. So I think that was a pretty darn good trade. 357 minus 20 is, sorry, 336. And the stock's at 329.60. So I don't know if that makes sense, but I feel like I got that amount of cushion on the way down. Now remember, I'm in this for the juice, but I also got some extrinsic value or intrinsic value as protection on the way down. It's a little bit of a twist on what you've been seeing me do. And this is why I like selling on the money. Now, I might have made a slight error. I had the 300s, if you remember, if you're watching these trades, and I rolled them up when the stock hit like 378 or something like that. And I rolled them up, not all the way, but I rolled them up to the 357.50. So it had hit 378. I can't remember. You can go watch the video. But as the stock was going up, I didn't roll it all the way up all the way, right? Why? It's a yellow market. So I don't like rolling up in a yellow or a red market, but I did roll up partially. I wish I hadn't, because now the stock would be $30 above the strike or whatever. So, but that's the way it goes. I rolled up. I made a bunch of juice by rolling up. I got 2 bites at the apple, I think, in the same week, and I'm happy with the trade. I'm happy with actually the way everything's going. If you see these numbers that I'm going to put on the next screen, which I don't know what they are as I say this, I think we're all going to see that there's a benefit to selling covered calls and getting the juice. But having a strategy and having a trading plan and understanding what the flow of this is like, because this stock has gone from 300 to 378 back down to 330 or 320 where it was this morning. This thing is crazy. What is your strategy on the stock? My strategy is to focus on this extrinsic value column right here, right? A lot of you are focusing on my basis. I'm not worried about my basis. My basis is going to take care of itself as long as I keep taking care of this extrinsic value. This extrinsic value was a lot higher than it is now, so I get to buy it back cheaper, which is what I'm going to do. So all I'm going to do is close this position out, and I'm only doing this for you. Normally I would roll it, but I'll probably roll after I finish the spreadsheet part of this, and go out to next week. But I'm going to go ahead and close out this position, and just so we have some closure on the short side, and you'll see that it's basically worth nothing. I'm going to buy back those positions at the market, confirm and send, and there we go. Okay. So now you'll see we're going to go back and make sure those are out. I have zero left of the 357.50s. They were expiring today anyway. I paid what, 6-7 cents for them. I don't really care that much. It's 48 bucks. Gets me out of the trade. And now I have closure on the sale that I did last week of those 357.50s. And now I can put together a little bit of a spreadsheet. So let me do that next, because now I've got a closed position, and it's a good time to I'm not closing the position out. I still have 6 months left, or just under 6 months left. But I want to at least show you what's going on in the account. And I want to put it in a light that, this stock has gone down $200. So I want to show you, this is where I started this trade on November 20th. So if you go back to November 20th, this print, was 473. Today, the stock is at 328. Okay. So from 473 to 328 is where I've been trading this stock. You know what, guys? In hindsight, I wish I had picked the stock when it was going up. You could always really make great money when the stock is going up, as you know, duh. But you can make great money in covered calls as the stock is going up too. But the cool thing about covered calls is you could prevent loss on the way down, as I'm going to show you in just a second. So remember how I was talking about I do these math videos so that you can see what the math is like. I'm going to show you how cool this is because check this out, man. You're going to love this. You're going to be like, oh my God, look at the math on this. Selling calls in a bear market on this stock. Right now, the stock is in a severe, I mean, it doesn't look like it on this chart, but 200 something, what is that, 240 points down? All right, so let's take a look at the spreadsheet. So, all right, so look at the spreadsheet here, and I want to pull it over all the way to the left so you can see what's going on. Up here in the top, in this gray area, this is all the base positions. So you can see I started 1120 by doing a buy, and then I quickly sold it and realized I wanted to go a little bit closer to the money. Anyway, I ended up with the 250s, and then I rolled down to these 175s, which are still on the screen. So these are all closed out positions. They add to my base position, and you can see that that's the last trade. I've got 8 contracts basically at 192.53. None of this to me matters. This is just my license to be able to get the juice on the other side of the trade. Okay. It's just the way my system works. It's the way my brain works. And it's how I make money, or at least in this case, I don't lose a lot of money. So you can see I got $260,000 into this base position. It's only worth 136,920. So you're like, oh, Mark, you're a lousy trader. Yeah, maybe. I'll give you that. If you want to stop the video now and not listen to anything else, you get to walk off with the decision and the impression that I'm a lousy trader because I've gone from 260,000 to about half of that on their base position. But if you want to keep going and watch the rest of this video and be smart and educate yourself like the rest of you are, look at how much money I've made in selling calls against this position while it's gone down 240 points. Okay. If it had gone down 240 points, I'd be down a huge amount of money, but I'm not. Let me show you why. Step 2 is what is it worth today? Okay. And I'll show you that in just a second, but it's worth $136,920. If I wanted to sell it out today, go to the Bahamas, take my chips and go home, right? 136,920. That's what it's worth. I've got all of these positions over here, and I'll show you, give you the preview. This is how much I've made on those positions, profit and loss on the non-base positions. These are the positions that give me the income, the juice on the account. I've made $113,069.25 on the juice on the non-base position. Forgetting about this, forgetting about what it's worth. If you net this out, I'll show you, and then I'll show you what I'm talking about. $260,000 base position cost. 136 is what it's worth today. 113 is how much money I've put back into the account by selling calls. I'm down $10,000 if I were to walk away today. That's why I got walk away value there, right? Like my little name there. Walk away value. Like if I had to walk away and say, you know what, I'm closing the account out. And it's probably not a bad idea because this is a red market. So I could walk away. But you know what? I've spent 8 weeks in this position, and some of you are going to go, well, yeah, you spent 8 weeks in your position, you haven't made any money. Yeah, but the stock is down $240. If you'd have known it's going to be down $240, you would have shorted it. And then you could tell me whatever you want. But until you do that, you're just hopefully going to learn from this because to me, I think this is actually really cool. So I bought this stock when it was, way higher, 470 something. And now it's at 330 or 328 and I've only lost $10,000 if I were to walk away now. You get that? All right, let me just show you the rest of this, and then I'll go back and kind of show you the rest of my thinking here. So the short positions are these, I call them the non-base positions, but you can call them the short positions. So we sell to open when we open those, and then we buy to close when we close them. And that's why I've got them in different colors. They all match and they're all kind of bundled together. That's why I do the spreadsheet, because if you do the thing that Thinkorswim or Schwab gives you, it's really complicated. Okay. So this is how I do it. So I made $71,000 on that first position. Remember how deep in the money I was, and then 3,000, 8,000, 5,000. Yes, then I rolled up, probably a little bit too early on that, and I quote unquote took away 29,000. I still made some juice, but I took away because of the roll up. So you started to, there's a theme that these roll ups that I'm doing may not be the best thing, especially in a down market, but nonetheless, here we are. 23,000, 19,000, 2,000, and one of these was a sell a put strategy somewhere. I think I write it in here somewhere. I actually made a mistake, and instead of selling to open, I bought to open, so I had to close out that position. I even made a little bit of money on that. I call that a mistake trade. And then you can see 13,000 gain, 39. I've gained on all the juice positions except for 1, 2, 3, right, including the one today. And so you could see this one on January 2nd, I closed it out the absolute next day, I lost 4,850 because the stock was climbing, I believe. And so I had to pay a little bit more, but that's the price you pay. They're not always going to work, everybody. And then on this one, I did this. The stock was really climbing, and I ended up moving my stock price, my strike price, from the 320s to the 357.50s. Probably not as conservative as I should have been. But you know what? At the end of the day, it ended up making $16,000. So you add all of that up, okay, and you end up with this total profit of $113,069. Let me make sure that's right by letting Schwab tell me, or letting Excel tell me if that's right. Yeah, 113,069. Isn't that what I have? Yeah, 113,069. So I've lost $10,000 on a position on a stock that's gone down $240. Okay, this is the last thing, just so you know that I'm not BSing. This is the number that I got from Schwab. This is if I took those 175s net liquidity and I just sold them, and I said I'm done with this position because I don't have anything short against it. I wouldn't have anything long once I sold those. It'd be all cash, and I'd be able to pick up $136,940. And you saw that reflected on my spreadsheet. So, what are the conclusions? The conclusions are, if you don't have a strategy for creating income, you are just at the whim of the market. You'd have lost, if you just bought when I bought and sold today, you'd be down $240 times however many contracts you'd have, right? You wouldn't be down just $10,000, right? Another couple of weeks when this thing stabilizes, I'm going to be making $15,000, $20,000 a week like I was in the beginning. But that amount of money has enabled me to stay in the game. What other investment strategy allows you to stay in the game when the stock goes down by half, right? Almost half. It's down $240. That's pretty big move. Do you have a strategy that's helping you do that? Or are you just buying and hoping like most people? That's what most people do. We buy, we're like, oh, MicroStrategy is a great company. Michael Saylor's awesome. It's going to go to a gazillion. Bitcoin's going to go to a gazillion. Yeah, but what do you do between the time that you're wrong, now and the time that you're wrong? It doesn't go to a gazillion. They don't always go where we think they're going to go, even though we think we're really smart, even though that Tom Lee or some schmo on CNBC tells us that we think the stock is going to go up. You've got to make your own decisions, and you've got to get probabilities on your side. How do we do it? We buy the right stock. I think MicroStrategy is the right stock in the right market. This is not the right market. It's a red market. And we've been fighting that. You've seen that at the right spot on the chart. Well, we kind of didn't pick the right spot on the chart. We picked it when it was going up, but maybe it was at the end of its going up. And then we squeezed the juice. That's a big probability in our favor. That makes up for a lot of the other sins that I've made in the account. And I've made mistakes, but the cool thing about the strategy is you're allowed to make mistakes. You can make mistakes and trade, $250,000 worth of money and be down $10,000 on a stock that's down 240 points off of its high. Like, come on. So I hope you're getting this, right? I'm going to keep making these videos. As soon as the market cycles back up the other way, which I hope it will soon, you're going to start seeing this account printing 10, 15, $20,000 a day, a week in it. And that's what I'm in this for. Like, some of this is patience and being able to hang in there. And the way I hang in there is I take a gambler who's a stock buyer and an option buyer, I should say, and he gives me money to be able to buy my stock. That's the juice. The juice is the time premium, not the whole premium, but the time premium. He's paying me juice to be able to buy my stock at some point. So that's the external energy coming to my account. This is the external energy most people have. Hope it goes up. I've got energy from some schmo that wants to gamble that it's going to go double or triple, and he's going to give me money. He's the gambler. 80% of the time, the gambler who buys the option loses. That means that 80% of the time that the seller sells the option wins. In my case, I look at the juice. I always get the juice. That means 100% of the time, if I focus on the juice, if I don't worry about what the account value is going to do, like, look, I haven't worried about it for 8 weeks. The stock has gone down, but the juice makes up for the rest of it. When this starts to go back up the other way, you're going to be amazed. Okay? I know you haven't seen a lot of it yet. You've seen some weeks, but you'll see how cool this is once it starts to happen. Stay tuned. I'll keep making videos as long as you keep liking and subscribing and commenting. I love all your great comments. You guys are getting this. You understand, though, that this doesn't just come to you, right? This is a process where you have to work against what we've been trained. Well, you want to buy low and you want to sell high. The market always takes things up, but you have to be proactive in this market. You have to be able to find a stock, maybe not this one, but a stock, to be able to get the juice to create income. If you just sit there and wait, you're not going to make any money. You would have to wait for this stock to go up 140 points from here, or whatever the number is, 240 points to its high, if that's where you bought it. like that doesn't always happen in a lot of stocks. It might happen in this one. It might not. It might go down 140, right? But you can see that my strategy has been working. Even when it goes down, I'm drinking lemonade either way. I either drink pink lemonade when it goes down and I add a little bit more to my position strategically, or I drink green lemonade when it goes up and I make the juice, I make the money. All right. Stick with me long term on this, right? We've been through it 8 weeks and we're about even. I think $10,000 in the loss, pretty even. I can make that up next week if the stock just stayed the same or go up a little bit. I don't think it's going to go up. I think it's going to go down. So I'm going to be a little bit more in the money, most likely. Am I talking too much? I feel like I'm talking too much, but I have so much excitement about this, and I want you to get this right because it's a total brain recalculation and reprogramming, and it takes you time. If you've watched all of my 30 videos on this by now, hopefully you're getting it, right? Most of you are. I see your comments, you're starting to come alive. You're like, "Oh my God, I've never seen a strategy like this." I don't think there's anybody else out there doing this, and that's great. You've got to hang in there until you get it. Got to hang in there until you get it. Those of you who do will be rewarded on the other side. Thanks for being here, and I'll see you on the next video. Take care.
Hi, Mark Yagi here, wealth architect and author of this book on my covered call investing system called the Cash Flow Machine. Listen, what you just saw is just one part of creating reliable income of 2 to 4% a month from the stock market. But if it were that easy, then everyone would do it, right? If you want to learn how I create investment income the right way, then you need to learn and have a system with rules and what-if strategies so that you can learn what I do when the market goes against me, what I do when the stock goes against me, how to adjust my trade so that it's always in a winning position, how much to risk, how to build a multi-million-dollar portfolio that creates income of $10,000, $20,000, or $30,000 a month in semi-passive income. And best of all, the whole cash flow machine system takes less than an hour a week to implement. Just go to cashflowmachine.io to learn more, or click this link for more videos, masterclasses, and free resources. See you there.
Hey, it's Mark Yagi, and if you haven't subscribed to this channel, please do that right now. That would be a great favor to me, and plus it helps me get this material out to a lot of other people that might need it. I've got a little bit of a movement going on here, and I want to try to change the world one person at a time, showing them that you can make safe, reliable income from the stock market. And plus it helps to grow the channel a little bit. Also, if you would give me a thumbs up on the video and like it, great. If you don't like it, give me a thumbs down, that's cool. But just tell me why you don't like it so I can get better. And then hit the notification bell so you can get these videos as soon as they come out, because a lot of times this is timely information and you want to get that information before it gets stale. The last thing is to join my free Insider Tips newsletter. There's a link below and you get everything in one spot. You get breaking news and analysis also. So that would be great if you could do that too. See you soon.